You are now tuned in to The Money Zone with your host, Folasade, the accountant for entrepreneurs. The time is now, your future waits, your money matters, make no mistake, it's not too late to dominate, so don't delay, get your money straight. The money zone, together we'll achieve your goals, we're building wealth, you're not alone, so don't delay, get your money straight.
Hey guys. Oh, Trump, my. Hey guys, welcome back. Look, did you miss me last week? I missed you guys. We had any technical difficulties in the studio last week, so I was not able to grace your presence last week, Tuesday, but I'm excited because our guest, Jordan Goodman, still decided to join us in the Money Zone today. So if you guys are new today, you don't know who I am, you're like, who is this girl? Who is this lady on Radio Network? I'm Folasade, the accountability accountant. I help entrepreneurs and individuals live both their business and financial goals. And I do that by incorporating the numbers, which is your accounting and your bookkeeping. And I also hold you guys accountable to do the work that's required for you all to live the life that you all dreamed of. So I'm excited today because we have an amazing guest in the building, and he might be already on the line waiting for us to call him in. But we have America's Money Answer Man, Jordan Goodman, here in the building. So before we go ahead on and pull Jordan in, let me just go ahead and do a brief intro about our sponsors. So today we have Cityside Auto Body Shop, guys, located here in Clinton, Maryland. Cityside is women owned, okay, 5-star rating. They can handle any type of auto body problems that you may have. If you cannot afford to pay it yourself and you have an insurance claim that you need to be made on your vehicle, they can handle every type of insurance claim out there. They are prestigious in terms of service, and don't forget, like I said, women owned. So go ahead on over to Cityside Auto Body. If you have any damages or been in a car accident, tell Julia and Derek that Folasade sent you from the Money Zone. And then next we have Suncrest Financial Services, located here in Largo, Maryland. Suncrest provides accounting and bookkeeping services for small business and for the startup business out here in the Washington DMV area. Suncrest's goal is to amass the masses with financial knowledge so they can now go out and build massive businesses. So I'm excited. So Trump, can we go ahead on and get ready to pull Jordan in? We're going to take about maybe a 20-second break. Give me and Jordan some time to get him in, and then we'll be right back. Welcome back. So look, today is exciting because we have Jordan Goodman in the building. So just to give you some background, Mr. Goodman has spent 40 years focused on one mission, okay? one mission to help Americans do better with their money. So how many of you, let's be honest, need to do a little bit better with your money? Me too sometimes. I'm human, right? In his career spanning newspapers, magazines, books, radio, television, live events, teleseminars, the list goes on. He's the creator of MoneyAnswers.com. He has helped millions of people to solve their financial problems and realize their financial dreams. And what is so funny, guys, when I met Mr. Goodman at FinCon, he was just standing in the middle aisle, figuring out where he going to go sit. And I'm like, hey, come and sit down with us. Come and sit down with us, right? So he come and sit down. And I knew he wasn't a regular guy, y'all. I knew he wasn't a regular guy. I'm like, hold on, I know I saw this guy from somewhere before. Did you write a book? Like, do you have the investment guide, financial terms, investment book? He looked at me. I'm like, you got that little blue book that I got on my dresser? So come to find out, Jordan Goodman is the creator and co-author of those small pocket dictionary investment books that we all have. Remember back in the day, we didn't have Google. We didn't have all of this stuff that you millennials and Gen Z have. We only had books like Mr. Goodman books. So guys, help me bring Mr. Goodman on and welcome him on to the Money Zone. Hey, Jordan.
Great to be with you.
Look,
I don't know if the books are pocket-sized. They're 900 pages, but it's a big pocket, I guess you might say.
Well, yes, for the big pocket books. Yes, for all my Hermes bags and my Birkins and the big double C bags. Yes, your pocket dictionary can fit in there. So, Jordan, thank you so much for gracing the stage on the Money Zone. I'm just excited to have America's Money Answer Man in the building. Like, this is a blessing, y'all. We have to, thank Jordan. We have to really thank him. So we got a lot to talk about. So the first thing I want to first talk about, Jordan, look, is, when we talked at FinCon, I told you that I was excited and on a mission to help America's small businesses, right?
Yes.
And then I was like, hold on, Jordan. You talk about America's debt, and then the topic just came. How does America's debt impact entrepreneurship? So that's my first question to you. How does America's debt impact entrepreneurship?
Well, first of all, it's hard for them to raise capital if they've got debt. And it's hard for them to start the business in the first place if they've got debt. A lot of younger people today have student loan debt, much more than in previous generations. And it's really changing society. People can't go out and rent apartments or buy cars or start a family or do the things they normally would have done in their 20s because of the amount of student loan debt they've got. And so they're starting them in the mid-30s and later. It's one of the reasons the birth rate has gone down. A lot of people don't want to start families until they're out of some of that debt. That's just one of many examples of how the debt. Just to give you a sense of the numbers here, we have about $1.6 trillion in student debt right now. We have about $1.3 trillion in car loan debt now. We've got about $1.1 trillion in credit card debt, and about $13 trillion in mortgage debt. And I'll add another $500 billion in medical debt as well. So there's lots of debt out there, record highs for consumers these days.
Wow. So do you guys hear that? 1.6 trillion in student debt, 1.3 trillion in car loan, 1.1 trillion, trillions. Okay. And then Jordan also said that we aren't, starting families because of the amount of debt. So when you think about it, when we go out and say, okay, I want to start this business, do most people consider the amount of debt that they've already accumulated before they jump out and start that business?
They should. Maybe a lot of them don't. But you may have a great idea for a new business, but if you don't have a good capital base and you can't fund it through the early years of losses, you're not going to make it, even if it's a great idea. That's a lot of businesses start undercapitalized, and that's often the reason they don't make it. Not because it's not a good idea, there's not demand for what they're doing, but when you start a business, you're going to have losses for the first few years. You got to be able to make it through there until it becomes profitable. And so you need backers, whether it's friends and family, venture capital. You've got to have some money behind you to make this thing work. Now, it's a little bit easier today because you can start a business online, which is in many cases cheaper and faster to do. And you don't need stacks of inventory and warehousing, a lot of that stuff you can do. You can do fulfillment. You can buy a lot of the pieces that in the past you would have had to own. So it makes it a little bit easier. But still, you've got to have enough capital to make it work, and a lot of people don't.
And you know, Jordan, you topped on a very sensitive topic just now. The fact that most African American owned businesses all automatically start undercapitalized, and then the second thing, they start off with the highest amount of student loan debt, mortgage debt, credit card debt. So, do you feel as though with the amount of debt that African Americans and small business, well, African Americans in specifically have accumulated in debt, do you think that that is one of the leading causes as to why African American businesses slowly fail quicker than other counterparts and other ethnicities?
Yes, because they're undercapitalized and they need more capital to be able to get through those early years of losses. And you don't need debt; you need cash to make a business work. You got to pay your employees, you got to buy inventory, you got to do marketing. All these things cost money. So indeed. Now, one of the things I invited you to was the Congressional Black Caucus event, which just happened to happen the week after we met at FinCon. And there's all kinds of programs you probably saw there to help African-American small businesses get over these hurdles. There are programs to help them in various ways. I mean, just to give you one example, the Small Business Administration has a whole division of minority business enterprise that helps African-American businesses, get SBA loans and things like that. There are a lot of federal contracts that have a certain amount of what they call set-asides for minority businesses that they have to do, 25% of their businesses has to be given to minorities. So there are some things out there that can help people that have to learn about, but you got to play the game, and those are some of the ways to help play the game.
So, Jordan, you said something there's ways out here, guys, for us to, for you to be helped. If you go to the SBA and check out. But, Jordan, you also mentioned something to me about truth and equity. Is there any type of strategy that can help out small businesses when they go to truthandequity.com?
Absolutely. So this is a strategy called credit line banking, and literally it allows the average person, including your audience, to pay their mortgage off in about 5 to 7 years instead of 30 years on their existing level of income, literally saving them tens of thousands of dollars and 25 years or so off their mortgage. Now, this works both as an individual and as a business person. I mean, say as a business person, you're buying a commercial property, a factory or your store or something like that. You can use this practice to pay that commercial mortgage off much faster. And as an individual, your own home, you can pay off literally 25 years faster than you ever thought possible. I always like to give out websites that help people implement the strategies we're going to talk about here. And in this case, the website I'm going to give is what's called truthandequity.com. And I'm just going to briefly explain how this strategy works. It's not something most banks either know about or certainly don't want you to know about, because they love it that you pay on your mortgage for 30 years, right? You pay them tens of thousands of dollars in interest. With a traditional mortgage, you pay the same payment for 30 years, the same, and the first 10 to 15 years, you're paying almost all interest, very, very little principal for many, many years. And then if you refinance the mortgage, you start all over again. Even though your payment and interest rate may be lower, you just started a new 30-year clock all over again, paying that much more interest. Okay, that's the way the system works. Now, with the mortgage optimization, you use a home equity line of credit, or what's called a HELOC, H-E-L-O-C, which is a liquid line against your house, like a second mortgage against your house. You can put money in, you can take it out whenever you like, and you keep your income, which in the traditional system is sitting there in the checking account doing nothing for you. You keep your income in that HELOC, and it pushes down your balance on the mortgage every day. This is what's called average daily balance. So instead of once a month making almost no progress, here every day the same money you've got is making a lot of progress, accelerating progress, until you pay the whole thing off. Let me just give you, if it would be helpful, I'll just give you a super simple example of how this might work. Would that be helpful?
Yes, it would.
So say you had a house worth $300,000, okay? And say you had a $200,000 first mortgage at a good rate, 4%, something like that. Okay, with the traditional system, you'd pay the same payment for 30 years. That $200,000 would be paid off with most of the interest up front. With the mortgage optimization, you would take out, say, a $50,000 home equity line of credit, HELOC, and then to just open it, it hasn't been used yet, you write a $50,000 check on the HELOC towards the first. So now you owe $150 on the first and $50 on the HELOC, right? Then you keep your income in that HELOC, and every day you're pushing the balance down. And after, say, a year or so, you pay that $50,000 off back to zero. Then you do it again. You have another $50,000 check in year two. So now you owe $100 in the first, $50 on the second. You pay off the HELOC over that year. You do it twice more. After 4 years, you paid off the first, and the fifth year, you paid off the HELOC, and you are now mortgage-free. That's kind of an oversimplified way of doing it. But you see, the difference is every day you're making progress on the principal, whereas with the traditional system, you're making almost no progress for many, many, many years. So at that free website, truthinequity.com, you fill in what's called a personal profile, which you put in your income, your expenses, your house, your mortgage, all the numbers, and it's going to say, okay, based on what you're doing today, it's going to take you 28 years to pay off your mortgage, whatever it comes out to be. And with the numbers you just gave us, it'll be 5.6 years, whatever it comes out to be. And then they show you step by step how to do it. So we have just saved your audience 25 years off their mortgage and tens of thousands of dollars in needless interest, which you can then use towards your business, so you're not undercapitalized in your business.
Oh, wow. Oh, wow.
That makes sense to you?
It makes sense to me. It makes sense to me, but it may have went over a few of you guys' head. If that is the case, just go to truthinequity.com, and what we'll do, if you go and check it, it's right on the screen, truthinequity.com. If you have any questions, just message me, and then I'll get that over to Jordan so we can kind of get that squared away. But if you are stuck in a lot of debt, I advise you to take a time, first evaluate what a debt is, and then go to these resources that we are giving you tonight on the Money Zone. So, Jordan, let me go ahead on and take a quick little break, and then we're going to come right back, okay? Oh, hang up. He said hang. No, don't hang up, okay?
I'm not hanging up.
Okay. Hey guys, thank you so much for just taking a little pause, probably grabbing a cup of water and getting ready to dive right back in. We have America's Money Answer Man, Jordan Goodman, in the building. He just gave you guys ways to reduce getting stuck with your mortgage for the normal 30 years. And to chime into what Jordan left us with, when I went and paid my mortgage, okay, for this month, okay, it said I only paid $47,000 towards my principal, okay? No, $20,000 towards my principal, okay? And guess how much towards the entrance? Over $67,000 towards my entrance. So exactly what Jordan said is that we need to try to figure out mechanisms and tools and instruments like the one that he offered us here tonight, truthandequity.com, so we can pay more into our principal and not get stuck with just, hey, giving the banks all of the interest that they want. So guys, help me welcome back Jordan.
Great to be with you again.
Look, Jordan, so they say America's debt is what, like 16 trillion based off what you, like 22 trillion based off the numbers you gave us, right?
That's the consumer debt. That's correct. Consumer debt is about 16 trillion. The government debt's about 22 trillion. That's correct.
So, Jordan, how does that impact just use me, for example, small business, 15 employees. How does this consumer debt and this government debt, how would this impact my little old business?
Means you can't hire as many people. I mean, what you just said, you're paying $67,000 or whatever it was in interest in your mortgage. Can you imagine if today you were mortgage-free, how that would impact your business, right?
Yeah.
And that's what's happening, and that's what could happen to you, is instead of paying all that interest to the bank, you could be paying your mortgage off, student loan debt off. Using the strategy we just talked about, they estimate that 25% of Americans could be debt-free within 5 years.
Wow.
Using that strategy alone.
Wow.
And what a difference that would make. They could go out and improve their homes, improve their businesses. Just, it would make a huge debt because, you know, people have this debt, and I mean, the credit cards alone is huge. People they're paying 18% interest, very, very high interest rates on that debt. And meanwhile, you're earning nothing in the bank in CDs and savings accounts.
Yep.
So this is why the banks are getting rich, but the average person, particularly African Americans, who tend to get the worst deals, have the worst of it all. They're paying the highest interest rates and, in many cases, the worst mortgages as well.
You know, Jordan, so that goes right into my next question to you, sir. So based off what I've observed, many African Americans, you know, we start our businesses off with no loans, no investment, but just our retirement accounts, our credit card debt, our credit cards, and everything else. So I've been hearing from a lot of financial professionals that you should not use your personal credit card debt to fund your business. Do you believe in that saying as well, Jordan?
I agree with that. And I mean, if you're going to set up a business, it should be because it's a business. It's not a hobby, okay? You're going to set it up thinking it's going to be successful. So what you want to do is to create business credit separate from your personal debt. Business credit cards, you have to set up what's called a Dun & Bradstreet report. It's like a credit report for businesses. It's separate from your personal credit report for like Equifax, Experian, TransUnion, things like that. A lot of people don't do that. They start the business out of their personal checking account using their personal credit cards, and then if the business is successful, they got to pay themselves back and extract the business out of their personal accounts. It's not a good way to do it. I would say when you start a business, assume you're going to be successful, and you start it in a way that you can eventually sell it. I mean, you're not going to do it forever. Say it's wildly successful. You want to set it up so that you can, in fact, sell it. It might be 10 years, might be 15 years down the road, but do it that way instead of running it out of your personal thing. Now, there are companies that will help you do that. There's actually a website called businessanswerstoday.com that will help you figure out what the best mechanism would be. So, for example, there are different choices. There's an LLC, Limited Liability Corporation. There are LPs, which is a limited partnership. There are Subchapter S corporations. There are Subchapter C corporations. There are different choices you have depending on your situation as to what might be best for you. And that website, businessanswerstoday.com, can help you figure out what's best in your case. And not only the kind, but where the business is domiciled. Now, I have a business. I'm in New York, but it's based in Nevada. Nevada has a lot of asset protection rules that will protect you. For example, if you get sued on some reason, they're not going to be able to take away all your assets that way. So there are other ways to protect yourself and have a corporate structure from the beginning that's advantageous, as opposed to what most people do is, as you say, run it out of their personal checking account and using their personal credit cards.
You know what, Jordan? You said a lot. So, okay, so guys, let's take a step back. Let's digest what Jordan just said. He said that there's options for you guys. You just have to go out and become resourceful. But then he also said you need to set up businesses that are like legitimate businesses. You have an LLC, a partnership, S corp. I mean, well, not X corp, but corporations and so forth. So what I'm finding is many of you that is watching the Money Zone right now, or have been watching me for years online, you all have not sat down with your accountant yet to really establish your business. I have a client that I just forced them to register as an LLC, Jordan. The previous accountant knew that this guy was a go-getter, had already made already had owed IRS around $15,000 or so. Perfect candidate to convert him over to an S corp or to have him register his business initially as an LLC. But because he wasn't properly advised, when he came to me again this year, guess what happened? He didn't even have the business structure for me to now save him $30,000 to $40,000 in taxes this year. So just going out and getting the business properly structured not only will protect yourselves from debt accumulation, but it can also protect yourself from liability, and then also protect you from taxes as well. But if you all don't take a step back and come and do a consult with me, talk with professionals, and stop running from the money answers, right? Then guess what? You will probably be in a better shape, and you would not have to use your personal debt, your personal credit, and everything to build your businesses. So Jordan, let me just ask you just one quick question. If, from a financial standpoint, if a person was to use their personal debt to fund the business and the business doesn't work out, what is that individual's responsibility?
Complete. I mean, it's on their personal account. And I hear that all the time. I hear people who said, oh, my business failed, and it's dragging me down personally, because they are personally liable for all that debt, even though it was a failed business. So that's one of the reasons. If you have a business credit in the business's name and the business goes out of business, it's not, as long as you don't give it a personal guarantee, it's not something you're personally going to be responsible for. So that's why having business credit is an awful lot better than attaching it to your personal assets, because the creditors of the business are going to come after your personal assets to try to get as much as they can back from you. So you need, this is what they call the corporate veil to protect you against those things. And that's why I think Nevada has a lot of particular advantages in that case. I mean, you as an accountant see it all the time. People are mixing up their personal business and their business, and they're asking for trouble. You want to set up an account, probably a subchapter S is most appropriate for most of your people, or an LLC. Create an IRS taxpayer ID number, have a separate bank account, separate credit cards, separate everything, and run it as a business. This is a business you're running here. And you've got to do all the little legal things, too. You've got to get a charter in the state you're based in. You've got to do annual minutes and all those kind of things. I do this. I've got a company in Las Vegas called Anderson Advisors that they do all this for you, all the legal stuff. But that way, if you do all this stuff, you have a legally correct company, and if you get sued or something happens, you don't have liability problems, you are protected against this. And if it's all in your personal name, they're going to come after everything you've got.
And they want to, Jordan, too. They want to take everything you have, too. Look, because your assets is worth more than a little bit of entrance that you're paying. Let's really be honest. Okay, look.
Exactly.
Okay, so we learned a few things, guys. Don't build your business off your personal credit. That's number one. Go ahead on and establish a DUNS number. Go ahead on and start to build your business credit. So Jordan, do you have any maybe like one or two swinger tips that can guide them on how to get started with their establishing their business credit?
Yeah. There's a place, I mentioned the businessanswerstoday.com. That'll help them set up the business. But there's a place called Tour de Business, TOURDE business.com. That's a place that helps people establish and improve their business credit. You set up a DUNS, as you said, a DUNS number, Dun & Bradstreet, and then once you have creditors or vendors, you report what's happening to Dun & Bradstreet, and then they show over time that you have a good payment history. It's the same thing as with the personal side, except you have to give them information. The Equifax, Experian, they just get the information on their own. But you tell them the vendors you're dealing with, and then the best you can do is what's called an 80 Paydex score. Paydex score is how you pay your bills as a business. If you have a good Paydex score, you're going to be able to get all the credit you want, and quite quickly, because people want to work with you. Vendors want to give you credit so that you buy their stuff. So that's the goal. So if you don't know how to do it, this tourdebusiness.com can help you set up and improve your business credit.
And that's Tourde Business, TOURDE business.com, guys. TOURDEBUSINESS.com, guys. So don't forget to go ahead on and check that out. So Jordan gave us a lot of resources. So what we're going to do, I'm going to figure out a way to email it. But then also, Jordan, you gave me a link. If you guys go to give me one second.
Go.moneyanswers.com.
Go.moneyanswers.com.
/ the money zone.
/ the money zone. That's what it is. Go.moneyanswers.com / the money zone. Jordan will have everything there, every resource that you guys need, so we can get you guys debt free. Because according to Jordan and what I've been reading out there, African Americans are suffering from the highest burden of the debt crisis right now. And so what I don't want is for you guys to not jump out there and start those businesses because you feel like, oh, you have too much student loan debt or you owe too much on your home. That entrepreneurship is really the gateway to economic freedom, economic wealth, especially in the African American community. So, Jordan, do you believe that statement? Because, they say that a lot over CBC that Black entrepreneurship is the gateway to economic empowerment, Black economic empowerment. Do you believe that statement?
Absolutely. I mean, you see, like Black Entrepreneur Magazine, there are a lot of people who've done really well and gone to the middle and even upper classes by offering really good products and services, innovative things, and yes, it can be done. It's harder, but it can be done. It's being done all the time. So, I mean, maybe a little bit of inspiration, something like Black Entrepreneur Magazine will give you, Black Enterprise, that kind of thing, can actually give you some ideas of how people do it. And it doesn't only have to be in entertainment and sports. People think that's the main ways that they do it, but not at all. There's all kinds of people who can do it quite well. I wanted to mention, we're talking about the debt, a specific area. If you have a business that gets into a lot of debt, you have to do the strategy of what I call debt prioritization. And what that means is you prioritize which creditors have the most leverage over your business. Not every creditor has the same leverage. A utility company that's got your lights, they can shut your electricity off tomorrow. They've got a lot of leverage. You got to pay them sooner. Some lawyer that did a contract 3 years ago for you that you never went through with has no leverage on you. But what most businesses do is they respond to the creditor that screams the loudest and the most frequently. Okay? That's not the way to do it. So if you prioritize your debts, pay more to the one that's got more leverage and less to the one with less leverage, you can actually get out of debt. Now, you can try it on your own, but there's a website to help you there, which is called helpwithpayables.com, and they prioritize it for you, and then you just make one payment a month to them, and they disperse it to all the creditors, and they say that 75% to 80% of the businesses that go with them get saved and actually can get out of business debt in a way that otherwise they're just not going to be able to do. They just get overwhelmed, and you get the creditors are screaming at you and writing you nasty letters, and you're hiding under your desk somewhere. That's not going to help you. There it is. Corporate Turnaround is the company. Get your business back to profit by helping them deal with the creditors instead of you deal. You get back to running your business. If a creditor calls, they say, call my people at Corporate Turnaround. I don't have to deal with you.
Jordan,
that'll help a lot of your listeners.
Look, Jordan, let me give you a funny story. So while I met you in FinCon and, the spirit, the connection, you were giving me resources right off the bat. And I was telling you, hey, Jordan, some of my clients are really suffering from this merchant cash advances. And so you were like, hey, Folasade, write this number down, call this person, do this, do this. Come to find out while I was sitting with you at lunch, one of my clients ended up firing us because he went out and ended up getting 14 merchant cash advances in over a 6 months time span. We didn't even see it in his bookkeeping because he was using it like credit cards to pay things, so it never showed up on the bookkeeping. Come to find out, Jordan, he was like, Folasade, I need my debt schedule updated. I was like, debt schedule? Okay, I have that. Here's the 2 loans that I have on books. Oh no, I have this loan, this loan. I was like, hold on, give me the list. So he gave me the list, long story short. Come to find out, he done amassed over $300 and something thousand worth of merchant cash advances loans. And he ended up thinking that, all right, Folasade, you do my accounting. You can do these extra 14 accounts for me with no additional fee. And then also I'm going to walk into Bank of America with all of these cash advances, and Bank of America is going to save me. And guess what? Till this day, Bank of America have not saved him. And it's
they will not save him. Those are very, very high interest rate debts. Yes, very, very.
And
I think I told you about it the first time. I don't know if you'd heard about it, but it turns out your client was in it. These are what are called MCAs, or merchant cash advances, and it's what I call the payday loan of small businesses, basically. And what they do is they'll make an unsecured loan in 24 hours, very quickly, just by getting a few numbers over the phone. You get the money, and you're really happy. You make your payroll with it. And they take over your credit card processing, typically, and they'll take a fee out of it every day, and then they take other fees. It can be 40, 50% interest, and typically they're short-term loans, like 2 weeks, something like that. And then when it comes due, the vast majority of people can't afford to pay back the principal, so they take out another merchant cash advance to pay the first one, exactly as happened with your client.
Exactly.
And they just pile on top of each other, in this case 14, and there's currently about $600 billion worth of merchant cash advances outstanding. And I think I told you this before, the people behind it are hedge funds. Hedge funds are the ones that make all this money. They've got billions of dollars, and they're making huge returns on this money by sinking tons and tons and tons of small businesses. So actually, the people I mentioned before, the corporate turnaround people, 90 to 95% of their business is from businesses that have merchant cash advances, and they help them get out from under them, because it's just a plague out there. And they're kind of caught in between various regulatory agencies so they can get away with this. When the Consumer Financial Protection Bureau, the CFPB, was set up by the Dodd-Frank Act in 2010, it specifically excluded small businesses. It's only for consumers. So this is a small business loan, and that's why they can get away with these outrageous fees and interest rates, because they're not regulated by the CFPB. It's an outrage, it really is. It's hurting a lot of small businesses. If you possibly can, avoid merchant cash advances, because it's a death trap.
You heard it from America's Money Answer Man guy. It's a death trap. Stay away from the merchant cash advances. So if you have no other option, Jordan, and that was you, what would you do?
I would go to corporate turnaround, because that's what they do. I've talked to them, and they say the merchant cash advance people will settle for pennies on the dollar. The reason is they already make all their money in the first month or so.
Right.
The rest of it's gravy, right? So if your guy with $300,000 in 14 merchant cash advances went to corporate turnaround, again, their website, helpwithpayables.com, they may settle that for like $10,000 or something.
Oh, my goodness.
Because they made a huge amount of money up front. The rest of it's all gravy.
Oh,
so there's no way you as an individual would be able to negotiate that. But I've just given you a resource that just took care of your client on the spot.
Oh, my goodness. So, guys, and I'm going to email that to him as soon, even if he fired me for no reason, okay, because I wouldn't do his bookkeeping for free. I'm going to go ahead on and email them that. So, guys, if you have any questions for America's Money Answer Guy, Jordan Goodman, give me a call, 301-232-5700. We're about to wrap up with Jordan. We've already had him longer, and, he's in very high demand, guys, so I have to be very cautious and tread very lightly. But just one more last thought. And this goes into the medical aspect. With all of the new changes with Obamacare, and most, 50% don't have health insurance now. I remember I even went without health insurance for a while. My children as well went without health insurance for a while. Is this debt crisis in terms of the medical field? Let me rephrase my question. With the accumulation of the high medical debt, do you feel as though with those debt amounts on our credit report, would that stop us from getting that loan from Bank of America, or would that stop the business? Oh, wow.
Absolutely. It's about $500 billion in healthcare debt. About 50% of bankruptcies are because of medical debt. And you're right, what's happened, I remember originally under Obamacare, everybody had to have medical insurance. But the tax law that was passed in 2017 said you don't have to be medically insured anymore. So that means a lot of people have dropped it, which means they're not paying the premiums. But if they get hit by a medical calamity of some kind, it can wipe them out financially, and it's huge. You can't imagine how quickly these medical bills total up. $80 for an aspirin, all kinds of crazy things like that. So if you have a lot of medical debt that you can't handle, what you want to do is to go to a healthcare advocacy organization, and that their entire specialty is settling medical debt for pennies on the dollar.
Wow.
My favorite place is actually in Philadelphia. It's called Healthcare Advocates at healthcareadvocates.com. I was with him recently, and he said that they had a guy who had a heart attack. He had a $200,000 bill, and they settled it for $3,000.
Wow.
Something like that. So Healthcare Advocates, this is what they do, is they take care of billing issues. In many cases, you're billed double and triple for the same procedure, all kinds of fluff in those medical bills. And then they negotiate on your behalf to save you literally thousands of dollars on your medical bills. The medical companies, whether it be a doctor's office or a hospital or drug company, they're willing to get something instead of nothing. You can't repossess somebody's heart that they've given you in a new heart, something like that. So it's in effect an unsecured loan. But you as an individual, there's no way you're going to negotiate with the CFO of a hospital group or something. Those are the people that do it. So that'll help you with all that huge medical debt, which is rising all the time as these healthcare bills go up.
You know what, Jordan, you didn't already just gave us enough resources. Let me put these resources in my pocket really quick. Let me go to put in my pocket. So is there anything else that you want to leave us with at all in terms of the connection between debt and entrepreneurship?
Well, the less debt you have, the more chance you're going to be successful as an entrepreneur. You want to be well capitalized. You want to build a credit report, as we talked about, build a credit score, and then you can get all the credit you need. But start off the right way. Set up the right kind of business, your own business credit on your own way. Get out of the mortgage debt. We talked about how to do that. Mm-hmm. Get off your medical debt. Don't do it out of your personal credit account. Create a business credit line, and you can do great. You have to have a good idea. But a lot of people have good ideas, and something you have a passion about is where you're going to be successful in business. You shouldn't buy a job. You should love your job or love your business, and that passion's going to come through.
You know what? Jordan, today have been absolutely amazing. This takes the cake. You closed out my night amazingly. Had a stressful day with my kids. I just want to say thank you so much for being a part of the Money Zone today and just giving my audience so many amazing resources. I hope that you guys go and check it out. If you are swamped with debt, remember, Jordan's goal is to make America debt free. Go out and tap into these resources that you've ended up receiving here on the Money Zone. We will post a link in some of our social media links, and then I'll see if Trump will put it on the website as well for all of you. So go to ripradionetwork.com. But don't forget, go and check out Jordan at Jordan, can you give us the link one more time?
It's go.moneyanswers.com/the Money Zone. And I've got some of the resources. I've got a free newsletter. I've got a free YouTube channel. I've got all kinds of resources that people can find out there. And I just want to continue. And I'm glad to take emails from your listeners as well. My goal is to help people in any way possible, including you.
Thank you so much, Jordan. You are absolutely amazing. So we will touch bases, sir. And I have a lunch date with Kevin on Thursday. So
excellent.
Yes. All righty. Have a good night, Jordan. Thank you so much.
Very good. Thank you so much. Really appreciate it.
Yes.
Good night.
So, guys, we had America's Money Answer Man's here, Jordan Goodman. He dropped so many gems. It is no reason why you or anyone else that you know of should be stacked up with so much debt. Like, many of you are blocking out your phone numbers, putting do not disturb, and basically blocking numbers, and just so much. If that's you, definitely message me on the chat. If you're watching us on Facebook, please share the video as well. And don't forget to go to Jordan's website, which is go.moneyanswers.com The Money Zone. Go to Jordan's site, get your resources. If you have a lot of student loan debt, check out the site. If you have a lot of mortgage debt, if you want to pay off your house, I know I'm about to go ahead on and tap into that because I would rather for me to pay off my house, especially with all of the revitalization that they have going on. That's gonna be a good little $300,000-400,000 in my little pocket, right? But I'm excited. So what we're going to do, we're going to take a quick break, and then we're going to come right back. Welcome back to the Money Zone. Don't forget to check out our sponsors, Cityside Auto Body Shop, located here in Clinton, Maryland. They are, Maryland's #1 women-owned auto body shop. That's it. They also have 5-star rating, but then they also will make sure your car look like it's just coming off the lot, like fresh and so clean, like literally. When I go past the shop, everything is sparkling and shiny, and they don't cut corners. Julia and Dirk want to exceed your expectations and leave your car fresh the way that you bought it off the lot. Okay, so then don't forget to also check out Suncrest Financial Services. If you have not filed your taxes yet, Suncrest is still accepting a few late filers. However, this upcoming tax season, you want to be in the right hands. And what they've always heard is that people say that my taxes were never explained to me, or the person didn't explain to me why this happened. At Suncrest, that is their goal, to leave you much more knowledgeable than where you left off. So if you will, which all of you should be filing your taxes, okay, you definitely want to check out Suncrest Financial Services, located here in Largo, Maryland. So guys, let's go right into our hot topics. It's been a lot going on, right? Tyler Perry done killed the game, y'all. Like, I should be jumping up for joy. That's one of my hot topics. Tyler Perry, the first black-owned production studio to produce movies, okay? We're not talking about he partly owned like OWN and Oprah. I'm sorry, Oprah, I had to say that, okay? By Discovery. This is Tyler Perry owns 100% of this. So if you are a brown-skinned girl like me, or if you're a brown-skinned guy, this is a breakthrough for us. This is a breakthrough for us to show us that, guess what, we can own the NBA team. We can own the NFL team. We can own all of the AMC theaters. We can do a Magic Johnson, but remember, Magic Johnson don't own 100% though. We can own 100% of all the Magic Johnson theaters. Tyler Perry just made a stamp out there that we don't need the backings of anybody but ourselves and the people that have support us from day one. And one thing that I noticed, and this is one of my tips for entrepreneurs, he never left anybody that started with him. If you go back to the grain from when Tyler Perry started years and years ago, when he couldn't even get in, and the reason why I noticed, y'all, I'm an technical theater student. I used to go to school for Duke. I used to go to the school, Duke Ellington, the School of the Arts. I used to build sets and do all of that stuff. And so when I was in school, he was out there putting out them shammy little plays. Back in the days, our little tech stuff was more equipped than his. And so to see Tyler Perry take his production to his one show to now to have a production studio and can bring the African American story to television and to the movie theaters is amazing. Like, all of us should stand up and pat this man on the back, because he's opened the doors for our grandchildren and for the generations to come. We never have to worry about if our black actors and actresses will be able to get a job in Hollywood today. Because guess what? They have a black-owned studio, and he was so shy. He said, now hiring. So if you're black and you are actor, actress, or whatever, technical theater or whatever field, you want to definitely go ahead on and apply. And why not? Go ahead on and keep the coins in the family. But then also, what was our other topic for today? Sales tax changes. October 1st was a massive change in the whole U.S. Ecosystem. Well, how would I say? I said the ecosystem. So every time you buy now from a vendor that's in another state, that vendor will now be required to collect sales tax on your purchase. A lot of you that sell digital products and books on your websites, you are now required to collect sales tax. A lot of you that have products for sale and you are in a non-state tax state, you are also now required to start collecting sales tax. And many of you, if you've already amassed at least $100,000 in revenue, you are required to now remit sales tax in every state that requires sales tax. So what does that mean? If your business made over $100,000 over the last 12 months or previous 12 months, you are subject of one of those individuals that's required to collect and pay sales tax because you've met a certain threshold. So that threshold is $100,000. So I'm telling you guys that not to keep you under that $100,000 mark, but if you are making six figures and you know you sell products and you're not collecting sales tax, be leery, because they will start to send out compliance letters pretty soon. Okay, so guys, we had an amazing show. So many resources. Don't forget to go and join the mailing list. Go to bit.ly/ I think it's the Money Zone. It is / the Money Zone, right? Join our mailing list. We will also email you all of Jordan's resources and then direct you to his site as well. Okay, so remember when I started the Money Zone and became an accountant, my goal was to reduce the small business failure rate. The only way that I can do that is by giving you guys the resources, the tools, the strategies, and the people and the connections that I know of. So this is why I'm bringing people that I admire, people that I work with, and people that are amazing at what they do. So guess what, guys? Don't forget, tell a friend to join in on the Money Zone. Don't forget to go to iTunes, put the 5-star rating, go to Spotify, and everywhere else. If you want, oh my gosh, Trump, this is my 1-year anniversary here. What's today? Oh my God. It is 1 year today, y'all. I just realized today, hey Jordan, man, you didn't even know you were my 1-year anniversary here on the RIP Radio. I just realized that I'm supposed to be, it's a party, like I'm supposed to be dancing over here. It's been 1 year since the Money's been exclusively on Rip Radio Network, guys. So we have 1 year, we have years and years to come of bringing you guys amazing content, amazing people, and amazing resources. So guys, tune in next week. I will see you all later. Bye, y'all. Oh my God.